Support and resistance is one of the basic foundation of technical analysis. To become a successful trader in the market, the significance of this concept cannot be eradicated because price moves in waves. Support simply means a potential level where there will be a surplus of buyers, while resistance means a potential level where there will be a surplus of sellers. In this tutorial, I will educate you on how to identify powerful support and resistance levels in the forex market. This tutorial can also be applied to any type of market you trade, maybe it be stocks, crypto, metals, and so on. Take note, support means demand level, while resistance means supply level. Support and resistance levels on the chart can also be called key levels. To look out for powerful key levels, we have to move to a higher time frame simply because the higher we navigate, the more powerful these key levels become. To construct a major key levels, which is known as a powerful support and resistance level, we need to navigate to the daily and weekly time frame. Minor key levels are less powerful support and resistance levels within the intraday time frame, such as the 4-hour chart and below, but sometimes may be treated as a powerful key level structure depending on the type of trader's trading methodology. We will utilize the chart of the Euro USD for this tutorial. I'm a swing and day trader, so I prefer to navigate to higher time frame for the construction of my powerful support and resistance levels. Here's the daily chart. Let's navigate to the weekly chart. Remember, we want to track powerful support and resistance level, therefore, we need to start marking from the higher time frame. Let's zoom out and see the whole chart over a long period of time. Before we start marking powerful support and resistance structures, there are some rules we have to put into consideration, and they are: start marking key levels from current price action zones. Look out for major swings of highs and lows in the market for application of powerful key levels. Ensure key levels at rejection of bars structures are applied at well-defined zones. Ensure support and resistance structures are not too close or too tight. Look out for the most touched or tested zones in the market. Ensure your key level application respects your trading methodology. Also take note when constructing key levels on the trading chart. You have to keep things simple by treating those levels as an area or point of interest and not as a holy grail zone. As a position trader, construct powerful key levels from the monthly chart frame, then relate to the whole weekly chart frame. As a swing trader, construct powerful key levels from the weekly chart, then relate to the daily chart. As a day trader, construct powerful key levels from the daily chart, then relate to the 4-hour chart. As a scalper, construct powerful key levels from the 4-hour chart, then relate to the 1-hour chart. Since we have all these important factors into consideration, we can proceed further into marking out powerful key levels on this chart. Here's the last swing high of this currency pair in the year 2018. We can therefore go ahead and mark the extreme high of this swing as the highest resistance level. Also, we have to make sure this horizontal line catches as much touch as we can here. So we have the touch of this swing highs of bars here. Likewise here. And here. Okay, good. We can proceed to the next swings in this market. Here's the next high swing. Let's apply our key level structure here. And let's trace back to past historical rejection of lows of bars structures here. Okay, nice. Perfect key level constructed here. And here. Right here, it's acting as a powerful resistance level. And here as a past support level. Let's proceed further. Here's another high swing. We can have a key level here. Let's trace back to past historical price action on the left-hand side here. We can see there was a rejection of bearish engulfing bar here. And here, price cuts through the key level. For the fact this key level respects the swing here and which is close to the current price action, we can neglect the cutting of price through this key level structure here. Remember, one of these rules states stay closer to current price action zones. Right here, we can see once a resistance level is broken, it turns into a new support level. Let's keep marking powerful support and resistance levels on this chart. Here comes the next swing high-low. Let's apply a support level here. We can see some bars here cuts through the key level, but it perfectly aligns to the rejection of bars here. And it perfectly aligns to the swing high-low here. Therefore, there's more touches than the number of times this key level cuts through the body of bars here. So this support level here is okay. We can see there are series of rejection of swings level here. So let's apply a key level here to capture this zone. Here's another swing low for application of a support level. It cuts through bars here and fits properly on the highs of short wings here. One thing to remember is that support and resistance levels are not exact numbers. Oftentimes, you will see a support or resistance level that appears broken, but soon you later find out that the market was just testing it. This is what happened here. Also, at the lowest low of this currency pairs here, we can have a support level here and neglect the false move here. Now let's relate our support and resistance levels on the weekly chart to the daily chart. Here's the daily chart. Viewing through this chart, all support and resistance levels correspond to the daily chart. It's time to start our trading by looking out to see how prices react to this point of interest in the market.